Hello, everyone. This is the Keeping It Real in Real Estate show, and I'm your host, Kathy Blakey. I'm a realtor with Century 21, a marketer, entrepreneur, and nature enthusiast. In this podcast series, I'm going to take you on a journey as we explore topics in real estate, including the market, mortgages, common inspection issues, sustainable future, and more. Are you a homeowner? Future homeowner? Do you like saving money? Enjoy healthy living? Then this podcast series may be for you. Stay tuned as we go deep into these topics. And don't forget, subscribe, like, and share. In this episode, we're going to be covering what you should know about VA loans, whether you're a veteran or not. A VA loan is an earned benefit for our U.S. military members. In this episode, we're going to be covering the features and benefits of the VA loan product. So for me, as a military relocation professional, I've had an opportunity to serve many military buyers and sellers, and many of the buyers are using VA loans for the purchase of their home. In my experience, I found that the key to a successful real estate transaction centers around working with a lender who's knowledgeable about the product and that all parties have been fully informed and proper expectations are set. I hope that during this upcoming episode, everyone will be more knowledgeable about the VA product as a starting point to making a smoother transaction. Stay tuned as we cover these important topics and more. So joining me today is Darren Corder from Caliber Home Loans. Darren, can you tell me a little bit about yourself?
Well, hey, Kathy, thank you so much for inviting me, and I'm really excited to talk to you today. I'm Darren Corder. I am a veteran lending specialist and a loan officer, licensed loan officer with Caliber Home Loans. And I've been in the business since April of 2003. And I have been hyper-focused on the veteran community for the last decade. I am personally a veteran and have served in the U.S. Navy as well as the Delaware Army National Guard. So yeah, that's me. And my NMLS number is 812438.
So there's all kind of niches you could get into. What was your driving force in deciding that you might specialize in VA loans?
So I'll be slightly personal in order to answer that question because I'm always an open book. So 2009, 2010, as many people, I was hurting. It was not a fun time to do what we do for a living. And having a half a dozen children and a family, a lot of responsibility. Yes, I have 6 children. Of course, now they're not all children. I've got, they're adults. But, a lot of folks that are relying on dad to get up every morning and do what he's supposed to do. And I didn't even want to spell the word mortgage then. I was really trying to find what my why was. And, I came to that crossroads where I had to make some decisions about what I was going to do. And so if I was going to stay in this business and I was going to thrive in it, I had to find something that was going to bring passion back. And so for me, I woke up one morning and I said to myself, hey, are you a veteran? Yes. Who do you care about? Veterans and their families. And do you have something in your product mix where you can contribute? What can you bring to the table that would be a contribution? It was the VA loan. And so it was then that I looked at myself in the mirror and I introduced myself to myself and I said, hi, I'm Darren Corder, a veteran lending specialist. How can I help a veteran today? And I've been saying that now for almost a decade. And it brought passion back into the business for me personally, and it's done so much more, ethereally, emotionally, socially, and just helping out my brothers and sisters every single day.
Okay, great. Well, that's very helpful. Now I better understand kind of, what brought you to being the VA specialist that you are. So let's get a little bit more into the benefits of a VA loan and try to educate our listeners a little bit more about the products. And I guess from here, I'll just say, take it away, Darren.
Sure. So, I always start with the word benefit. When it comes to the VA loan, it is a earned benefit. So it's the only loan in the mortgage business that you have to qualify by your contribution to our government and our country and the world through raising your right hand and stating the oath and possibly laying down your life in order to get a loan to buy a house. So just to keep that in that context, that it is a earned benefit, and it's the only benefit that the VA provides that is driven directly through a lender. Like, you cannot call the VA and get a VA loan. You have to work with a lender. So some of the highlights of this are up to 100% financing with no money down. So your purchase price and your loan amount can be the same. No mortgage insurance, so no PMI. Every other loan type out there has the potential for mortgage insurance. FHA, USDA, conventional loans, depending on down payment, there's mortgage insurance involved. Not with a VA loan. Very, very flexible underwriting. Instead of being placed on some standard grid in terms of like credit score versus debt ratio versus this and that, it really is more about tell us a story. Why is this individual able and worthy of the risk of taking this loan and helping them, secure the loan? Very liberal and flexible seller's assistance guidelines towards closing costs. So there are just numerous benefits to a VA loan for a veteran and their families.
Okay, so far, Darren, we've been talking about the benefits to the veteran and the product. I'm going to switch gears just a little bit and turn the tables, because even though most of the listeners tuning in today might be listening about the benefits of a VA loan, I want to also help the sellers who are being approached with buyers using a VA mortgage, because I think sometimes there's concerns, I want to call them maybe even myths, that there's just too many guidelines, it's too strict, property requirements are too strict. I've heard that from sellers who have said, I don't want to sell to someone who is using a VA or an FHA, a government-backed product. And of course, my first discussion with them is to sort of dispel the myths. But for our seller listeners out there, future sellers, can you help us to understand what are the VA requirements and what kind of issues do you come into?
Sure. That's a fantastic question, and I'm glad I'm being given the opportunity to hopefully provide a good response. So first, there are numerous myths in the VA space that we actually go out and proactively teach what we call myth busting in order to get not only because ultimately, if we can get the real estate community to buy in to dispelling the myths, that will assist the sellers who they represent.
Absolutely.
To be more at ease in the process and not be afraid to take that VA offer, right? So let me give you first let's take some statistics around the buyer themselves. So the first myth is that they're a weak buyer. And I'm going to give you some quick statistics here that maybe will help us feel a little better, okay? So the median credit score for a veteran is a 712. The median liquid assets of a veteran is over 17 grand. The median household income of a veteran is over $87,000 a year, household. The average loan amount is over $255,000, and over 28% of veterans actually made down payments.
Okay, as opposed to the 100%.
Correct. So one of the things that we as lenders, my opinion is, I always tell folks, just because you can go to 100%, that may not always be the best choice for you. And we talk about those things. So we don't just automatically say, hey, go to 100% and have no equity in your home or in your property. So the biggest thing is I want to show people that veterans are not weak buyers. They also make awesome neighbors. They also take care of their properties. They pay their bills. The VA loan has the lowest default rate of any loan in the mortgage industry. So 0 down does not equal higher loss or short sale.
Very good point.
Yeah, I think it's a huge point, right? I mean, when the appraiser comes in and there's 5 short sales in the neighborhood and they're starting to make adjustments to the value of the house that your seller's trying to sell, and almost none of them are VA loans being shorted, or almost none of them are foreclosed upon. Now, I'm not saying that it doesn't happen. Of course it happens. But statistically, it is the lowest default rated loan out there. So weak buyer is a busted myth. I'd say another myth that comes along is that VA loans are harder to get through underwriting, right? Now, that not necessarily be the seller's issue, but it does talk to about speed to the market and speed to turn times. VA loans have the lowest overlays. And so an overlay, if anyone doesn't know, an overlay is where there's a minimum set of rules and the lender puts some extra added rules on top to protect themselves. In the lending world, we call that an overlay. So for example, if the minimum credit score on a loan is 620, but the lender says we're not going to go below a 640, that's an overlay, right? And so the average turn time of an application to closed veteran loan in the market right now is 27 calendar days. Not business days, calendar days.
Oh, wow. Okay, that's pretty good. Less than 30.
Less than 30 across the country from here to the state of Washington. So they're not harder to get through underwriting. They have less overlays than other loans. They are actually very, very expedient and very quick. Here's another huge myth, is that sellers have to pay all the veterans' fees. The VA does not say that a seller has to pay a veteran's cost to close. They can negotiate those costs as a seller's assist towards settlement, just like any other buyer in the market. And we know that right now it's still heavily weighted towards sellers, not buyers. So there's plenty of veterans who are not getting seller's assistance and still winning contracts and buying houses. So that's a myth. And now let's talk about the elephant in the room.
Oh, okay. The property condition.
The VA appraisal.
Oh, that, okay. Which is also related.
Property condition, correct, property condition. First, I'll do some rhetorical questions, such as, did you know that the lender does not look at the home inspection? So home inspection related items are still a seller-buyer negotiated issue, have nothing to do with the lender. Number two, VA appraisals have not been appraising the way the market thinks they've been appraising. Most people think that the appraisals that are coming in from the VA, they still think that Boston is a new band and that Jimmy Carter is still in office, okay? It's just not that way anymore. Does it not mean that there are some minimum property requirements? Yes, there are. And those are always basic safety-related issues. So some of the things that you see on FHA, like the handrail question, these spindles on a deck that are too far apart, tripping hazards like the broken concrete. Broken concrete usually isn't a big deal. Broken and separated and lifted concrete where there's a tripping hazard. That has come up from time to time. But let me ask you a question. Have you ever had a repair request on a conventional loan before?
Of course.
Sure. And let's say, or have you ever had an appraisal come in lower than the listed price of a contract on any other loan other than VA?
Absolutely.
And so what happens when you go back to the appraiser and you say, we think you're wrong and we think that it's worth this, not what you say it's worth? What really happens in the real world?
What really happens? Well, there's a negotiation that takes place, but rarely does the appraiser actually change their value unless you can come up with new information that somehow was hidden from them.
So basically yes, you're correct. So we are getting deeply involved with this. It seems like sometimes this endless back and forth between the listing agents, the buyer's agent, the lender, the appraiser. I mean, it can get a little crazy. And sometimes you can spend 5-10 days going back and forth to end up at the exact same place. The VA does not require that. When a appraiser submits an appraisal to the VA for final signature for what we call an NOV, a notice of value, the appraiser is no longer involved in any communication about the value or the repairs of that property other than a final inspection if required. So in other words, let's say the contract is for $200,000 and the appraisal comes in for $191,000. If we put in a reconsideration of value, that ROV or reconsideration of value goes directly to the VA, not the appraiser. And so I am able to work with the real estate agents to create a simple grid that shows why we justify the price that the contract was written at. It goes to the collateral department of the VA directly. They do not communicate with the appraiser. They say, show us your case for why you think it's worth $200 and not $191. They don't have skin in the game. They don't take it personally. There's no emotion involved. It's show us the data. And if your data supports what you say the house is worth, then more than not, more likely than not, you'll be able to get the improvement in the value that you may be seeking. There is never a guarantee, of course. However, the biggest difference here is the moment that that appraiser lets go of the appraisal and it goes into the VA portal, they're out.
I did not know that. That's good information.
That is a huge benefit, not only to the veteran, but to the seller, to the listing agent, to the entire process. And it is one of the biggest misnomers in the business. And it is the one that I can bust every single time.
Awesome. Okay, so it sounds like besides the property condition, the appraisal review process and the quality of the buyer are other great reasons why a seller should be more than willing to accept the VA buyer for their home.
Yes. In my opinion, I think that the VA offer should go to the top of the pile every time. Mm-hmm. And I don't mean that for me. I mean that for the veteran and their family. I don't care who the lender is. Mm-hmm. At the end of the day, let's get more veterans into homes and their families into homes so they can actually have a safe and sound place to live and be a part of the community.
Okay, sounds great. Thank you, Darren, for that insight. All right, so going a little deeper into the VA loan product, I have a few more questions for you.
Sure.
Let's talk about the loan being assumable and what that might mean as a benefit to the buyer.
Sure. So the VA loan is an assumable loan. And this is something that comes up more often, especially around like active duty bases where there may be some frequent, what we call PCSing, or where they're getting a set of orders to go to another base or go anywhere around the world, right? So let's say that the veteran buys a house and 2 years later, they're going to leave that home. Maybe they've got a set of orders, or maybe they're just having some difficulty with making that payment, or maybe life has changed and they need to exit the property. That loan can be assumed by a veteran as well as a non-veteran. So the way that works is, let's say that the veteran finds someone who's willing to assume the loan. When they assume the loan, they're assuming the leftover balance, and they're assuming it at the interest rate and the payment and all of the criteria of the existing loan at the time that they assume it. They're not technically buying the home or getting their own financing. They're working with the servicer of the loan. Mm-hmm. So whoever is servicing the loan, they would coordinate the assumption with the veteran who owns the home now, the person or persons who are assuming the loan, and the people that are assuming the loan have to show that they have the ability to, qualify to make the payment and, also be safe and sound to take that on. And they do all of that through the servicer. Now, here's where it gets a little bit weird. The biggest thing that a veteran needs to watch out for is if the veteran allows a non-veteran to assume the loan, mm-hmm. they will be relieved of the debt, but they will not get their entitlement given back to them.
Okay. That was going to be my question because I was always under the impression it had to be a veteran.
It can be a non-veteran. So, however, the only negative, and could be a potentially big negative down the road, mm-hmm. is if the veteran allows a non-veteran to assume it, they're not going to get their earned entitlement restored to its fullest return for the next property in the future.
I see. Okay, well, that really helps give some clarity around that issue. All right, a few other questions around the VA funding fee. We didn't talk much about that. We talked about, there's no PMI, but there is this VA funding fee. What
yes, that is correct.
Provide about that?
So the VA funding fee is basically how the government insures the loans in the event of someone who defaults, mm-hmm. right? So there's no mortgage insurance that's being attached to the loan, but we do have to have some sort of safety net for the government. Because if you think about it, the government is not a lender. A government, in this case, is an insurer.
Mm-hmm.
They are insuring the loan. And the way that they do that is with a funding fee.
Okay. Are there any cases that you can think of where a veteran, it may not be in their best interest to use a VA loan as opposed to conventional?
Well, sometimes it may have to do with they're putting a certain amount of money down where maybe it's not giving them as much of an advantage versus a conventional loan, or maybe they have multiple VA loans already on multiple properties, because by the way, you are allowed to have multiple VA loans at the same time.
Yeah, that's been another, I guess, myth, we'll call it, but help us understand that a little better.
Sure. So the way I describe that is the VA doesn't say how much house you can buy, and the VA doesn't say how much money you can borrow. The VA only states how much money you can borrow at 100% before you have to have some skin in the game.
Okay.
And that's driven by the amount, well, it's driven by two things. It's driven by the amount of entitlement that you have available on your eligibility. And so if there's a certain percentage or a certain amount of entitlement that you've got tied up in property A, then we can do a calculation to figure out how much quote unquote leftover or bonus entitlement you can use to insure, once again, remember, insurability, insure the next property. So let's say that they bought a house on property A, and I look at the amount of entitlement that was used on the first property. And then I do the formula and I see how much is left over to do up to 100% on the second property. So let's say the maximum they could get on the next property was $250 at 100%. Then if they go to buy a house above the 100%, then there's a down payment formula. It still doesn't mean they can't use their VA. Okay. It just means they have to have some down payment above and beyond that 100% allowance.
Okay. All right. Well, that sounds great. And that's where your VA loan officer comes in to play in helping them to, I guess, calculate and understand that. Would you say that?
Yes. And so unfortunately, and believe me, the more lenders and the more loan officers who understand all the intricacies of the VA loan is not bothersome to me. I welcome it because it just means that there's more veterans getting into homes properly, using their benefit. And so I have an abundance mentality. I don't worry about what other people are doing. The only thing I worry about is a veteran and their family not being told or being told that they can't or won't be given the opportunity to own a home because they're using their VA loan.
Right.
That's the only place where I grab a shield and a sword and we go at it. So.
Okay, well, somebody's got to. So a couple more questions for you, Darren. Let's go just a little deeper into the product. And when we think about the buyers who are going to be maybe looking at different lenders and trying to understand their VA options, how do they go about rate shopping?
Well, rate shopping, so the VA does not control interest rate, right? It is an open market, pluses and minuses on a daily basis, just like any other loan. So the same, if we're talking about strictly making a decision based on the cost of a loan, but not the experience of the loan officer or the lender in the VA space, right? So obviously those are two separate conversations, right?
Okay.
But when it comes specifically to cost of or shopping for a rate, I would say that it would be the same advice I would give any borrower, VA or otherwise, which is you need to check with more than one source. I certainly encourage, hey, God bless America. Go get the deal that works best for you, that saves your family money, and that you feel comfortable borrowing money from ABC lender, right? So if you go out and you contact more than one lender, then you just have to do the apples to apples comparison. What's the interest rate? What are the lender fees? I always say that when people go out and they do loan shopping, make sure that you're separating costs that have nothing to do with the lender versus the costs that do have something to do with the lender, right? So a lender does not control property tax, doesn't control homeowners insurance or tax stamps or entitled insurance, any of those costs.
Right.
Those are all costs that we disclose, but we don't control. What does the lender control? They control the rate that they provide, and they control the fees that they directly charge.
Okay.
And so that's where the apples to apples can be made.
So tell us about the points how can a buyer make sure they understand the points?
Sure. So when someone is charging you points, typically it's what we call a discount point. And so when you're being charged a discount point, you're using your money, a 1 point being 1% of the loan amount. So if you're borrowing $200,000, and let's say your interest rate, and I'm not quoting a rate here, so I'm just using this as an example. Let's say that your interest rate was at 4.25%, and you are willing to pay 1 point or 1% of the loan amount. In this case, $200,000 loan would be $2,000, 1%. And the rate could potentially maybe go from 4.25 to 4. So what you're doing is you're using the discount. You're using cash to lower the interest rate so that it pays you back in less interest over the life of the loan. So the rule of thumb is this: 1 point is the same as 1% of the loan amount. So however many points you're being charged, it's always going to be a percentage of the loan that you're borrowing. And typically, and actually, to be honest, well, always honest, but VA requires that discount points only be used for rate reductions. So a lender cannot charge a discount point in their disclosure just to put money in their pocket and make more profit. That is illegal.
Is that different than an origination point?
It is.
Okay.
So an origination point is some lenders will itemize their fees and show every little fee. And some lenders for VA will just do a flat 1% origination point. And if they do 1% flat origination point, that is not a discount. That is not paying down the rate. That is just basically a bundling of all the itemized fees into one number. Okay. So if they charge 1%, they're going to charge that 1 point to every veteran, regardless of loan size. And so on some loans, they may make a little less because it's 1%. And if it's a larger loan, then maybe they make more, but it kind of averages out for the lender. So different lenders have different approaches on that. So I guess to summarize, an origination point is really a bundling up of fees. Mm-hmm. A discount point is used to reduce the interest rate and put you in a better position over the life of the loan.
So when we give it recommendations for rate shopping or for even lender shopping, taking aside the quality of the lender and the experience and knowledge, if you're only looking at the fees and rate and money aspect of it, they just need to be sure to do apples to apples comparison.
Sure. I even tell folks, if you're going to do a side-by-side comparison of interest rates and fees, especially rate, it should all be done on the same day.
Ah, thank you for that. That is something I've thought about before and talked to buyers about, but I'd love to hear a lender, also given that recommendation.
Sure. I mean, because, I always make the joke that the moment you hang up with me, my rate quote is already old until you lock with a rate, with a lock disclosure on a property with a closing date.
Okay, fair enough. That seems like a good recommendation.
Now, just as an aside, there are many lenders out there that are also doing different little programs out there, like lock and shop, or some lenders are allowing people to lock rates while they shop and look for a loan. Mm-hmm. So there's just so many different ways to get to the same place. It's hard to be a savvy buyer, actually, just because there's always the sizzle and then there's the steak. Hopefully this helped clear that up a little bit.
Okay. Yeah. I think you've given us a lot of great information, and that's, the part of having you on the program is, you've got so much knowledge and experience with the VA loans, and want to make sure that we're given a forum for others to tune in and hear that information, and then they can be a savvy buyer just from knowing what questions to ask.
Absolutely.
Yep. Absolutely. Couple more points for the buyers who are still with us. When it comes to the 100% financing, sometimes, and we touched on this earlier, sometimes buyers may think they don't need any funds into the transaction because, their friend rolled in the closing cost, or it's 100% financing. What do you mean I need to have X dollars? Help us with that.
Sure. So 100% financing is not the same as the cost to close a transaction, right? Those are two separate tracks, two side-by-sides.
Mm-hmm.
So if I buy a house for $200,000 as a contract and I am borrowing $200,000, I didn't put any down money on the price of the home. However, that does not cover the cost of actual closing. That doesn't cover, for example, I always like to use Delaware as a great example. The transfer tax in Delaware is 2%. So just one line item alone is 2% of that price. So one of the closing costs in Delaware could be on $200,000, could be as high as $4,000, just that one line item. And so closing costs have to do with the services, number one-time services, such as attorney fees, title insurance, all of the attorney and title costs. Then there are escrow accounts that we have to collect and begin, such as property tax, homeowners insurance, those lender fees that we did discuss, right? Origination or a discount point. So all of those things are closing costs and have nothing to do with the price of the home in terms of cash out of pocket.
Mm-hmm.
What I mean. So just because you're doing zero down doesn't mean that means no money. Now, once again, the wonderful thing about the VA loan is it's very flexible in how and where you can use different ways to reduce, lessen, or even eliminate the cost to close out of your own pocket. But I always remind people that there's usually some form of trade-off. If the seller is giving you seller help towards closing costs to cover your closing costs, it's not unusual that they build that into the price of the home in order to give you that cash.
Mm-hmm.
So unfortunately or fortunately, the truth is there is nothing ever free, quote unquote,
mm-hmm.
in the buying and selling of a home to anyone.
Except the free advice that you're offering today to our buyers.
There you go, right. Dropping the mic. Yes, ma'am.
Okay, so I'm going to just wrap up today by asking you, Darren, to give us a little more information about yourself, your company, and where you're licensed.
Sure, thank you. So once again, I'm Darren Corder. I am a loan officer with Caliber Home Loans. Caliber Home Loans is a national lender who is dedicated to helping veterans and their families with home ownership. And I have been doing this now for 16 plus years, and I eat, sleep, and breathe and live the needs of veterans, their families, and helping them in home ownership. And I'll leave you with this. So my phone number is 302-547-2131. So that's my cell number. I invite anyone who can text me or call me anytime. I always try my best to get back as quickly as possible. If you are a veteran and you text me, please put in, I am a vet. And I don't care what's going on. I will stop and I will help. So it's 302-547-2131. I am licensed in Delaware, Maryland, Pennsylvania, New Jersey, Virginia, and South Carolina. And I'm just now getting started.
Awesome. Well, you've got a few more states to go, but I'm sure that you're going to be able to help many of our listeners in the states that you've just outlined for us.
And also, if there's any states that I'm not licensed, I am part of a organization called Military Mortgage Boot Camp, MMBC. And this is what I call the enclave of some of the most laser-focused loan officers for helping veterans and their families all over the country. So I am one text, one call, one DM away from helping a veteran and their families anywhere. And that could be buy a home, but it also could be maybe they're hungry and they need a meal, or maybe they need a place to sleep tonight, or maybe their car broke down and they can't get to work, or anything and everything that a veteran and their family needs. We are ready to step up and help out.
Okay, what did you say was the name of that organization again?
MMBC, Military Mortgage Boot Camp.
Okay. All right. Well, once again, thank you so much, Darren. And I'm sure I'll be having you back from time to time because you've got a wealth of knowledge, and I appreciate you sharing it with us today.
Anytime. I really appreciate you for allowing me this opportunity.
Okay. All right. Thanks, Darren.
Bye-bye.
Wow, that was some great information from Darren today. We appreciate him coming on the show and sharing his insights and knowledge about the VA loan products. We're going to have him back on the show again that cover more mortgage-related topics. In the meantime, please be sure to stay tuned for Keeping It Real in Real Estate, and some of our upcoming topics will be covering the mortgage inspection issues that are common, and also some topics in green living. Thanks for tuning in to this episode of Keeping It Real in Real Estate with Kathy Blakey as your host. Visit www.keepingitrealinrealestateinfo.com. And if you haven't already done so, don't forget to subscribe, like, comment, and share. Also, if you or someone you know would like to become a guest speaker on this podcast series, please contact me on my website. You can also find me by searching the key terms Kathy Blakey Realtor. And you should be able to find me on YouTube, Facebook, LinkedIn, or Instagram. I look forward to hearing from you. As a disclaimer, this show is not intended to be used as a replacement for professional advice. For specific issues relating to your real estate transaction, please consult with your qualified realtor, mortgage broker, home inspector, or real estate attorney. Thank you.